All right, guys, bang, bang. I've got Shawn here with me. Shawn, I thought a great place to start would just do a super deep dive on what the hell infrastructure for market data is. And a great place there is just like, what is the market data? What data are you guys going to get, and how exactly are you gathering this data?
Yeah, absolutely. So, Amberdata, what we do is we provide market infrastructure, which spans both fundamental data or accounting data, which is on chain, as well as what's happening on centralized trading venues around the world. So whether that be spot markets, derivative markets, options venues, what is happening across, the top blockchain networks, every DeFi protocol, every DEX, what's happening, who are the liquidity providers, what are their positions, are they making money or not? So at Amberdata, what we do is we provide that connectivity into every centralized trading venue, as well as visibility into all activity on chain and across all of the protocols. And we provide that, which is pretty difficult to do and very expensive and very complex. And we make that simple so anybody in the financial services value chain can easily get access to that data and build data-powered applications on top of that.
And so how are you actually going to get it? Like, what technology have you all built? Where are they getting it from? And then what are you doing to synthesize or massage it before you show it to customers?
Yeah, absolutely. So we connect into centralized exchanges via their APIs and ingest that data real time by a WebSocket or fixed protocol, and then ingest the event level order books, which is really what's happening in the price discovery process real time. We aggregate that into open, high, low, close volume, reference rates, single asset indices, what have you, that gives them context. And then we connect into really the 30 largest trading venues around the world, which is billions of dollars a day in trading activity. And we ingest, normalize that to all the same timestamps so people can understand globally what's happening with spreads and market depth and price discovery. And then on the on-chain data, we run blockchain nodes, multiple archive nodes across every major blockchain, as well as catch all the ephemeral data, the pending pool, what's happening in the mempool, and then parse every transaction against an ABI to understand really what's happening in those smart contracts. What are the crypto economic mechanisms? What are the incentives? What are the inputs? What are the outputs? And we create a proprietary time series from that data. And we store all of that in AWS and other cloud providers. And then we make and provide that data to our customers via APIs so that they can build their applications on it. Now, why is that hard and why is that expensive? And isn't all this data free? These are the questions that people ask. And a lot of the centralized exchange data, like order book data, for example, liquidation data, is not even retained by the exchanges. So once it's gone, it's gone. So what we do is we capture that. So high frequency trading firms, market makers, regulators who want to understand behavior on exchanges can analyze that data, train their models, and make that data actionable. From an on-chain data perspective, it's incredibly complex to be able to get this data, and then take the raw blockchain data, which is pretty much useless as itself, and parse that and make that so it's information, which means that you need to run multiple blockchain nodes. You need to parse that data, and then you need to build that into time series that people can build applications around. So
once you gather the data, and you guys kind of manipulate / massage, synthesize, however you want to think about that, how are you showing it to the customers? Is this through an interface? Is this all API driven? Like, how are they actually ingesting it on their side? Or if I think of like the other side of the product?
Yeah, so what you think about it is we provide that data to our customers via RESTful APIs or via real-time data via WebSockets or via fixed protocol. And then they build financial applications on top of that, whether that be a front office trading, portfolio management, research application, or a middle office treasury or risk application, or back office fund administration, tax compliance, power the data to talk to your auditors. So they build on top of our APIs. And then additionally, we have recently acquired Genesis Volatility, which was the leading provider for options and derivatives analytics. And we now have a analytics platform that provides visibility into derivatives, options, and on-chain DeFi data, and we'll be extending that use case. So for people who don't code, they have the ability to understand what is happening in markets from a volatility, from a skews, from open interest, from kind of what's moving where and what are the relationships.
How much of this is used for trading? Like people are ingesting the data specifically for trading, or what most people would think of either high frequency, hedge funds, things like that, versus other types of use cases? Like what are the customers actually doing with the data?
Yeah, so I would say that we really focus on financial services, whether that be the banks that are building structured products or derivatives, non-deliverable forwards, et cetera, to the proprietary trading firms and market makers that are building, backtesting their strategy, identifying opportunities, quantifying risk, and then actually programmatically acting upon that, to the risk applications. For example, say you're a major exchange and you hold a bunch of stable coins. You want to know what's the variance from peg on those stable coins. What's the circulating supply versus the total supply? Are these things behaving as expected? Because do you carry them as treasury assets, or are they risk assets? We've seen a couple stable coins unpeg and then they weren't as stable as people thought. So we give people that visibility. We also, from a risk perspective, enable people to understand their counterparties' on-chain behavior and activity, to understand, hey, I'm a lending desk and I've loaned somebody USDC. Are they just taking and using that, or are they taking and rehypothecating that and adding leverage? It's not like a bank when they loan you money to buy a house. That they bought a house. In digital assets, you can lend somebody USDC and then they can lever that up 20 times and put it in something that's it may change the risk profile of how you perceive that customer. And then the last piece is we facilitate all of the trading that happens on this, and then the market surveillance and understanding what's going on. But you have to account for this. People have to be able to pay their taxes, do their accounting, provide good reporting, talk to auditors, talk to regulators, and people, are using our data to do all those use cases as well. So it's really spans the entire financial services value chain from front to mid to back office.
What's unique about you all is that you kind of sit in the middle here, right? You're going and you're getting a bunch of different data, whether it's through the centralized exchange order books, whether it's through on-chain data, kind of all those different inputs, if you will. And then you're actually presenting it to a bunch of different customers. Sometimes even some of the customers that you're getting data from, you're presenting back the data combined with other data sets. And so you're almost like in this like middle ground where there's a two-sided marketplace, and you all are like a broker to some degree, or at least that's kind of how I elementary, think about it. What are the advantages and disadvantages of sitting in the middle there like that, right? It's clear you have a lot of insights, but are there disadvantages, or are there other types of advantages that maybe aren't as obvious to people?
Yeah, I think from an advantage perspective, we are very, very uniquely positioned in the market, where we have the smartest people in TradFi, whether they be banks or people like NASDAQ or Citi or hardcore crypto natives like Galaxy or Pantera's of the world, where we're uniquely positioned, where we see very demands from crypto natives as well as demands from traditional financial services players, so that we've been able to develop a very unique product offering now. And what that does is it gives us this, we can see anything that's happening on any centralized exchange or in any on-chain activity. Say you're a traditional financial services firm, you're like, hey, what is this Aave lending market? There's $6 billion of total value locked today, working across 7 different networks, trading in 13 different markets. This looks like a banking business. This looks like a yield generating asset? How do I look at that, and how do I understand that? And so we really have this unique vantage point that we can help, whether they be traditional financial services firms that are moving into the crypto space or hardcore crypto natives, understand, quantify activity. And same goes for participation across the dexes. So Uniswap has, I think, $3 billion total value locked, and trades billion to recently to $20 billion a day in swaps between tokens. It's really unique to be able to not just have market data, but also have the on-chain telemetry to be able to see all the activity that's happening. And you can also start to see, now that FTX is gone, you're starting to see flows from, they were pretty much the only place that you could trade dollar denominated derivatives on crypto other than CME, to that flow starting to move to, GMX and DYDX and other, derivative platforms. So I would say that the unique position we have is we have the ability to see anything that is happening across the entire crypto economy. Now, the disadvantage to that is what we do is incredibly expensive and costs us tens of millions of dollars to build. And that's the advantage that we bring to our customers, is they don't need to spend tens of millions of dollars to create the market infrastructure to be able to extract the accounting fundamentals and market price discovery process. We make that easy for less than the cost of an engineer. A year, they can literally get access to years of development and tens of millions of dollars in investment.
When you think about the business that you all have built, what's the biggest risk for you all? Whether it is operationally building the company, whether it's something in the market, whether it's something in terms of the quality of the data you get, like how do you evaluate where are the risks, and then what are you all doing to mitigate those risks?
Yeah, so from a risk perspective, it's evolved a lot. We've been doing this for 5 years now. It used to be like, was crypto going to be here forever? And that's no longer a question. It's definitely not going away, and we're just seeing institutions continue to lean in. I think there's the risks to our business are, how heavily do we invest in fast-moving, early developing protocols? Because some of these things you could invest hundreds of thousands of dollars in building the instrumentation, and then boom, they go away. Like Solana right now, what's the future for Solana? It's hard to tell. But 3 weeks ago, Solana was booming, and there was hundreds of developers in Lisbon in a Solana hackathon sponsored by FTX. So you can make some bets, and then the landscape drastically changes. That's a biggest risk for us from a regulatory perspective. Crypto is not going away. We're seeing additional institutional, more institutions moving in now than I think people realize. And from a regulatory perspective, they're always going to need data, and they're going to need insights. And we have visibility and telemetry that doesn't exist in traditional financial markets. So, I don't think regulation is a risk. I don't think that the space going away is a risk. I really think that our biggest risks are what bets do we make, and not getting over our skis in one area or another, and so that we focus where the market is at and where it's going, and not squander our scarce resources.
What are you all seeing in the market right now? Obviously, we've seen the fallout from FTX. There's a lot of contagion in the market. Other companies and various funds are succumbing to kind of that contagion. What are you all seeing? Is demand going up? Is it going down? Is it kind of just the same? Are you seeing different types of customers come in? Are you seeing more of the same? Just give me kind of an update in terms of what does your view of the world look like post some of this chaos?
Yeah, so I think what we're seeing is that more sophisticated players that have been perhaps a little on the sidelines and we're building a longer term plan have now come back and said, hey, this is a great time to enter. This is a great price point to enter. However, their posture has moved from a FOMO that they were going to miss markets, to now, let me quantify this opportunity and quantify this risk. And I need the data to understand this. And I need to understand counterparties and flows and behavior and what are these mechanisms behind some of these digital assets that incentivize participation, and what do those cash flows look like? So it's actually great for us. Now, we obviously have, the last 6 months has been quite a ride. We obviously saw, the Terra Luna, depegging, and, financial markets are hostile environments. And when, pegs do get challenged and even in traditional markets. And you saw from that highly leveraged firms like Three Arrows blow up, which caused contagion to each of the lending protocols, lending firms, BlockFi, Celsius. Everybody knows the list of characters there. We relearned about counterparty risk. So I think what we're seeing, one of the takeaways from that is people are very concerned about custody. And I think that this positions of the large banks who have custody businesses or developing custody businesses to be banks in custody and hold assets for people. And I think people are looking to many of the TradFi players to potentially help them on their custody journeys. We with FTX, it's unfortunate. They were definitely the darling in many regards. But I think most of the regulators that we speak to in many of the large financial institutions are looking at this more like an MF Global or perhaps an Enron, and they're saying, "Hey, this is an event, but this is not the industry." And I think people are already starting to move past that. And interestingly, we're starting to see many of the traditional U.S.-based exchanges looking at this as an opportunity to lean in and perhaps acquire some of those assets from FTX out of fire sale, or some of the licensing, or use this as an opportunity to lean in. And the same thing goes for banking. We're now starting to see some of our banking customers developing stable coins that are FX pairs. We're starting to see non-deliverable forwards contracts, which are effectively perpetual futures contracts traded by banks to give their customers access to digital assets, for example, Bitcoin, without having to worry about having to, the custody components. If they don't have a custody business, they're now doing non-deliverable forwards. We're also seeing traditional financial services firms may have been in financial services for 200 years, start to build structured products around some of these assets because they know how to build structured products and security. So we're really seeing I would say a phoenix rising from the ashes on the FTX front, and I think that we will come out of this stronger, better, with better risk, and likely we will see regulation where I could envision a world where it's no longer okay for the exchange to be an exchange, a broker dealer, and to do custody. I think that will probably, we could see regulation there. And then we also see geographic differences in strategy as well. I think London and the UK right now and Singapore are both making plays to be the place for digital assets to operate and grow. So I think that there's a lot of positive things that come out from a pretty horrible 6 months in digital assets.
Got it. When you start to look out at the market over the next, call it 6 to 12 months, kind of going into 2023 and maybe towards the end of that year, what are the big things on the horizon for Amberdata, and then what do you expect to be some of the milestones for the industry?
Yeah, I think that right now what we're hearing and have been hearing for the last year is derivatives. If you think about traditional financial markets, there's about $480 billion a day that are traded in derivatives in the equities markets, and same goes for the FX markets, which are just gargantuan, right? I think that you'll see more and more sophisticated players come in and not want just straight delta exposure, long short for crypto. They're going to want to leverage derivatives to better manage their risk and generate yield and create structured products So we're seeing more and more sophistication around that. Secondly, I believe we will see centralized exchange orders start to move much more on chain to decentralized exchanges and to lending protocols like Aave, Maker, Compound, where people can custody their own assets and have better transparency into the health of the place that they're doing business. For example, in Aave, you can see every participant, their health the health criteria of their position, and the every change that happens to any of the liquidity pools from an interest rate perspective. And then the people are incentivized to clean up the systemic risk by causing liquidations. So I think that this is really positive for DeFi, and we will see more DeFi activity, I believe, than less, because that people have lost a lot of trust in the centralized exchanges. And the beautiful thing about digital assets and crypto is that there is radical transparency that does not exist in traditional financial markets. And it's players like Amberdata that are facilitating people to understand exactly what is happening in digital assets and understand the opportunities and quantify risk. So for us, we already have the deepest offering for on-chain data and DeFi, and have been really focused on serving institutional customers, whether that be banking, proprietary trading, hedge funds, market makers, fund admins, tax, accounting, compliance, etc. We'll continue to make the investment and be the deepest for understanding anybody's participation in the DeFi protocol, what's happening at the protocol level, what's happening at the governance level, how does that impact my holdings, and how do I account for those things? And then additionally, we're building out market intelligence platform right now to give a single pane of glass view of what's happening across every centralized trading venue, all of the DeFi activity, and really understand what's happening.
How about inside of the company? What is the excitement, enthusiasm? We're in the bottom of a crypto winter, it appears. Are people quitting? Are they leaving? Are you seeing more applications? What are you guys seeing inside of the company right now?
Yeah, so in the company, it's a little cocky to say, but it's great times where we're actually hiring from quite a few of the firms that have had unfortunate times. We've hired from several of the exchanges. We just hired a new VP of engineering who's a world-class VP of engineering from Voyager. We've hired some quants out of some of the funds that have blown up. It's been an amazing time. We are incredibly well funded. We are backed by some of the leaders in TradFi as well as crypto, and everybody's telling us now's the time to build, lean in. And so we're just ramping our engineering and our product and our customer support and our sales and go-to-market teams. And we're really just taking advantage of the opportunity to hire the best people and really go out and be partners with everybody that matters in this space, so they can position themselves for when the next bull market comes in, everybody's plugged and played and ready to go.
I love it. Where can we send people to find you on the internet or find out more about Amberdata?
Yeah, so Amberdata.io, or on Twitter, Amberdata.io, and we can provide a link in the webcast below to all of our social media handles.
Amazing. Shawn, thank you so much for taking the time to do this. It's pretty incredible to see the work you guys are doing, kind of how you're grabbing the data, what you're doing it from a synthesizing standpoint, how you're presenting it to customers. We've all been working together for quite a while now on various things. And I think part of what everyone agrees on in the industry is the fact that you need good data to make good decisions. And seeing the work that you guys are doing there is pretty cool. So thank you so much for joining me, and we will definitely do this again in the future.
Thank you very much. It was a pleasure to be on the show.